You're listening to Tarakki Talks.
Welcome back, everyone, to another episode of Tarakki Talks. You've got me, Ahalya, keeping you company on yet another podcast. And today we're going to be continuing the conversation around an investment tool that we have spoken about on this series, and that is the Balanced Advantage Fund. Now, to dive a bit deeper into the conversation, I will, of course, need an expert on hand, as per usual. Please welcome Ankit Sharma today, Director, Financial Mart, on this episode of Tarakki Talks. Hi, Ankit. Thank you for being with us.
Hi, Alia. How are you?
I'm good, Ankit. I'm good. Okay, so let's dive straight into it. This conversation around the Balanced Advantage Fund, especially in today's day and age, is an important conversation. So I think as much as we can talk about it, we should, specifically because of the time that we're in, right? So equity has always remained a very volatile part of the market in the past because it's always impacted by so many different reasons, right? You've got global macroeconomic trends, you've got political events. All of these things put together have an impact on the equity market. So volatility is, I think, ironically, the only thing we can rely on. Do you want to talk a little bit more about the equity market and how it's evolved in the past couple of years?
I think over the last few decades, there has been several international and domestic developments, especially in Indian equity markets. And we have seen part of the market. Going forward also, I believe that events such as election, geopolitical development can cause market to remain volatile. To form an investor perspective, it is important that one must learn to be friend with the volatility and make most of the opportunities as such which are available at the time of volatility. Historically, if you see the data, investors who have invested in these times or remain invested during a volatile time tend to get better returns over a long term. In conclusion, what we can say is that investors need to remember that volatility is the basic nature of investing in stock market. What is important to convert volatility into opportunity by having a robust asset allocation. We need to be, properly allocating our money into an asset allocation system, not time the market. That's the only thing we should keep in mind, that volatility will remain in stock market. We have to get married to this volatility.
Yeah, I think that's a useful thought, befriending volatility, as you said, and accepting it as part and parcel of, one's investment journey. So to take that last part of your response a step further, Ankit, the idea of asset allocation, what are some of the major challenges that the past couple of decades have posed in terms of asset allocation, both static or dynamic? And is there a sort of solution to resort to in such situations, and is that where the Balanced Advantage Fund comes in?
See, when investing, an investor has to go through a variety of decision makings. This includes which asset class to invest into, what is the proportion of allocation to be maintained, when should be the rebalancing to be done, and its frequency, the time to rebalance it. So the associated paperwork with each of the decision making, taxation, and there are a number of things which need to be kept in mind now. With the present taxation regime, things have gotten into more complex system. There may be many working or people who are into non-financial setup. It's very difficult for them to do this kind of jobs. So to address this challenge and help investors in their financial journey, fund houses have launched the Balanced Advantage category, which is a wonderful product.
Right.
The pioneer of here is the ICICI Prudential Balanced Advantage Fund. This fund dynamically invests across equity and debt class, and allocation is determined using an in-house model, which is largely based on price to book value. And this is very good allocation system where, we are following a system of price to book value, which is more authentic way of doing a selling and buying of a stocks in a stock market. So I think ICICI was pioneer in this Balanced Advantage category, and it has done very well since inception.
Yeah, wonderful. So let's talk a little bit more about the fund itself. Could you elaborate on the aim of the ICICI Prudential Balanced Advantage Fund?
See, there are many investors who kept away from investing in equity market because of their risk aversion to volatility. They don't want to see volatility in their portfolio.
Right.
These fund type do well for such investors because Balanced Advantage, ICICI Prudential offering such a counter-cyclical approach to investment is very good. This means that fund tries to make most of the equity market volatility by investing in equity when the valuation is attractive. When market has gone down, they will invest. Market goes up, they will sell. So these kind of funds are very good. Now all these major investors are able to enjoy stable return with relatively reduced or lower volatility. The most important part of this fund is when you are buying and selling at a fund house level, investors do not incur any taxation.
Right.
Because taxation part is taken care by the fund house. So which makes win-win situation for the investor as well as the fund. Because investor is getting low volatility return, as well as they are getting, taxation managed at the fund house level. And the fund is designed in such a way where they have an in-house model where this kind of volatility is managed. So in my perspective, greed and fear is also managed in this fund for the investor.
Interesting. Yeah, no, that definitely shines a light upon, the more human behavioral aspects, right, of investor behavior, which is something that we do talk about quite often. So how does this fund also aim to remove investing barriers for their investors? Like you just said, when to enter or exit the market is always a decision that investors really ponder upon. So in what ways can this fund help its investors tackle those concerns?
See, when to enter or exit the market is a tough decision for any layman. Even if you are a very seasoned investor, it's very difficult.
Right.
To ensure no bias in decision-making process, ICICI Prudential BAF relies on price-to-book value-based in-house model, which guides the fund manager when to buy or sell. Often it seems that the investor tend to shy away from investing after a sharp correction, fearing further losses. It happens, when market falls down, people shy away from the market. There is no biased approach when the fund is designed in a model. There is a price to book value based model which is working. In fact, there are best time to invest given that equity will available at attractive valuation. But what happens, investors miss out such opportunities owing to sentiment of fear of playing out. On the other hand, when the markets are steadily heading higher, greed comes in. People tend to, get overweight on equities, which is sometimes get into a bad investment experience. So when investing in a balanced advantage category, one is kept away from, again, greed and fear. You don't get flowed with the fear as well as the greed. So you have a disciplinary approach in investment because the model is already which is working behind it. So I think this fund takes care of that aspect also.
Nice. Okay. So let's talk a little bit more about the structure of this fund now, Ankit. There is, of course, we have again touched upon this, which is the idea of SWP, systematic withdrawal plan. But when it comes to another corollary of this thing, which is IDCW, income distribution cum capital withdrawal, why is SWP preferred over IDCW with respect to guaranteeing regular cash flow to customers? If you could detail that out for us, given that SWP is actually part of this balanced advantage fund.
See, this is a very interesting thing which now people need to understand because nowadays people are with, the lot of youth population is there and going forward there will not be any pensions available. See, most of the investors opt for systematic withdrawal plan nowadays to, address their cash flow requirement, whatever the cash requirement monthly they need to have in their banks. Given this context, IDCW does not match up because here the money is distributed only if there is a surplus available in the scheme. It is kind of earlier days we used to call IDCW as a dividend option. Now it has been changed to IDCW. IDCW is now taxable as per income, whereas systematic withdrawal plan gives you additional 1 lakh rupee tax-free income. So there is a hedging also. You can save some tax when you are doing systematic withdrawal plan. Okay. Secondly, you have manageable cash flow requirement. So if 1 month you need 1 lakh rupees and next month you need less or more, you can always manage. But IDCW is only available when there is a surplus available with a fund house or a fund. So in my belief, systematic withdrawal plan is a much better going forward as compared to IDCW.
Okay, noted. And that does make sense, of course, right? Because it's not that dependent on the fund house particularly. So that is an important thing to keep in mind. Ankit, we're reaching the end of today's conversation, but I do want to complete this interaction by asking you about what you mentioned right at the beginning, right? Which is there has been a lot of conversation about buying low and then selling high when it comes to the equity market. Could you simplify this concept for our listeners a little bit more and maybe set some context about what's the right mode or the right mindset to adopt while looking at funds? Do you need to consider this, buying low and selling high aspect?
See, the ideal approach to investing in equity is buying at low and selling at high. But generally what has happened, mostly investor does it opposite. They buy at high and sell it at a panic or at loss at a lower at the market. So the timing the market at top or bottom is very difficult task. But investors still engage in guessing this game. They want to understand if it's going up or it's going down, but it's very difficult to actually find out. So the optimal approach would be consider investing in categories like balanced advantage fund. The fund manager will do necessary allocation. Historically also it has been observed that such an approach tend to deliver encouraging results over a long term, along with reduced volatility. And especially if you see the ICICI Balanced Advantage Fund, it works on a price to book value model, which is more scientific, and it is a well driven product, and it has a time frame also to show that the fund has consistently delivered to investors. So I think rather than timing the market or thinking that it's high or low, I think we should follow these kind of funds into our portfolio, which have the higher return and low volatility.
Fantastic. Well, thank you so much, Ankit, for your insights on today's episode of Tarakki Talks. I think it's helped us understand the value of a tool like the Balanced Advantage Fund a lot better. Thank you so much for being with us today.
Thank you, Ahilya. Thank you very much.
Everyone, stay tuned to more podcasts from our series. As you know, we constantly dive deep into various investment tools that might be useful and valuable to your investor journey as well. We'll catch you on the next episode of Tarakki Talks. But in the meantime, stay safe and stay happy.
You were listening to Tarakki Talks.